again for our insurance tip of the week from Brian Insurance. It's Sonia Edwards. How are you, Sonia?
I'm great. How are y'all doing?
Good. Has Rick been behaving himself?
I don't know. I haven't really seen him.
I know,
Sports have started, so.
See, that's the key to a great marriage. Is y'all have other things to do.
This is the way it works. I get up, she's asleep.
Yeah.
I come home, she's asleep.
Yeah.
There you go.
Last
Night was the difference.
Last night, I got home earlier. I was asleep when she got home.
Yeah, that's rare. It's usually the other way.
From her deal. And so tonight, it's going to be, well, we'll see each other.
Yeah, we'll see each other at church tonight.
So we'll see
and
each other
at lunch
tonight.
today.
So I've got an appointment with her tonight between 6:30 and about 9, and then after that I won't see her again until Saturday.
We'll see each other at lunch too, because it's Lions Club.
Yeah, that's right.
So, see, just fit it in when you can.
All right. Well,
But so I have no idea if he's behaving himself or not. To answer that, probably
I
not.
don't know either. I don't know if I'm doing anything wrong or not.
Yeah.
Nobody else tell me.
As far as I'm concerned, he is. As far as the rest of the world, who knows?
All right. What do you have for us this week?
Well, I had somebody ask me a question, and I think we've talked about this, but it's been a while, and it's always a good topic. Somebody asked me, and in this case, they were talking about a commercial building, but it applies to homes as well, and is why does the insurance company care how much I insure my house for my commercial building? What's it to them? That's the question. And first of all, I want to say, we don't make the rules at Brian Insurance. We just play by the rules. So when I try to explain why, I'll do my best. But what I really want to talk about is how and the different ways you can do that, because that is something we can play with. The best way that I know to explain it is they don't, you're not telling them, well, I only want to insure these 3 rooms of my house. So if something happens to the rest of my house, I don't care. It doesn't work that way. And the insurance company wants to collect premium on what the exposure is. And so they want you to insure at least within a certain percentage, depending on the policy, usually 80%, but they want you to insure to value that house or that commercial building, because if something happens to it, you're not going to say, oh, well, that's the part I didn't mean to insure. No, that's not the case. So that's the best way I can explain as to why.
And
but
contents are separate.
Contents are separate. Yeah, I'm just talking about the building right now.
Gotcha.
The building right now. On a home policy, typically the contents is a certain percentage, and then you can increase that if you want to. On a commercial building, you give an amount, and it's usually, you give us that amount. The client does, but just talking about buildings, and some policies, usually you'll see it on a commercial, have what's called a co-insurance clause. Homeowners, it's the same thing. They just call it an insurance to value clause, because people get co-insurance mixed up with health insurance. But what that clause will say in the policy is, at the time of a loss, if that building is not insured to at least that percentage of what it would cost to replace it, we're talking about replacement costs, then you're going to be penalized on a claim that same percentage. So to make the math easy, say that 80% of coinsurance is $100,000, and you insure your building for $50,000, then you have a claim, and that claim is $2,000, you're only going to get $1,000. So they penalize you. So you don't ever want to be in that situation. You want to make sure before the loss that you know what are the insurance to value requirements on my policy, and then am I within that percentage? And there's different ways to insure. There's the most typical one, and the one we recommend is what's called replacement cost. The only difference between replacement cost and actual cash value or non-replacement cost is depreciation. So if you have replacement cost coverage, and say your roof gets blown away by a storm, or what we see here most often, hail damage to your roof, then if you get that roof fixed, the company will pay what it costs to replace that roof less your deductible. If you don't have replacement cost coverage, then they're going to take out for depreciation. So you probably don't want to be in that situation unless you have an older building and you just don't care and you don't want to insure it for replacement costs. Okay. Then there's other ways around that. Now I'm talking on the commercial side now. Homeowners, it's not too many ways around it. But the good thing about homeowners is most insurance companies inspect and agree to the amount ahead of time, so you're probably not going to get into a bind there. But on the commercial side, and again, this is all before a claim happens. Don't wait till a claim happens and then try to figure this out. Try to figure this out now before a claim happens. So say you're in a building that used to be a bank, and it has the vault and it has, all this extra stuff, but you're using it for a feed store. That's a real life example that has happened, not in Graham, but somewhere else.
Right.
Well, you're not going to rebuild if something happens and your building is destroyed. You're not going to rebuild it like a bank. You're going to rebuild it like a feed store. So there's a coverage called functional replacement cost. And if you have that endorsement, what that means is, what am I really using it for? That's the limit I want to, And then there's also agreed amount where your insurance company agrees ahead of time. Yes, we agree this is the right amount and we're not going to penalize you. So there's definitely all kinds of endorsements and things you can do. But the key to this, again, I know I say this every week, don't wait till a claim happens. If talk to your agent. If you have a building that's insured, whether it's your home or your business, and you're not comfortable, talk to your agent and find out, do I have replacement cost coverage? Do I have actual cash value? Do I have a co-insurance penalty or an insurance to value? Because that is something that, even though we talk about it to people when they buy insurance, sometimes it's a big surprise to them. They just don't really think about it. And so you just want to make sure that your building is insured to the proper amount so that if you have a claim, it will be paid the way you think it's going to be paid and not something different than that. So there's the answer to that question. So again, why the insurance companies make you, there's a big answer. I don't know. We just have to work within those rules, and we'll be glad to help you with that because there are some creative things you can do, but once you have a claim, it's too late.
I don't know anything about what she's talking about, but I know that what she's
Oh,
talking
I
about. I know what she's talking about. It's right.
I picked up on all of it.
Yeah.
I'm sitting there, talking about commercial properties and all that stuff.
I know.
I know there's a lot of differences and coverages and things like that.
Yeah.
And like you say, people before, there's nothing worse than you have a loss. And then whenever you go to get something done about it, you're going, I didn't have that. I didn't have that.
Oh, and we hate that. So that's the last thing as your insurance agent that we want. And I know people's eyes glaze over. I saw yours eyes glaze over about halfway through that when I was talking. It's not fun to talk about. And we try to talk about it, without using all these insurance terms, but just find out before, just ask so that you understand. That's the whole point of that. So,
All right.
okay.
How can we get a hold of you, son?
You can call us at 940-549-2525. Come see us, second floor Sierra Bank Building, or visit us on www.bryanins.com.
Thank you.
Thank you.